Hello and welcome to Your Stocks in the Mumbai News Studio. I'm Ekta Batra. Well, it's turning out to be a tough session for us today. We have recovered from the day's low, but nonetheless, we still have the mid-cap index, which is down around 800, 900 points as we speak, and the bank nifty, which is down around 273 odd points. The nifty as well as the sensex, both of them in the red, showing cuts of around 0.6 to 0.7% at this point in time. But as usual, we have a lot of queries. It's a lively market nonetheless. We're still fluttering around record highs, so we can't ignore that. We do have a lot of queries, especially in lieu of today's sell-off. So we have Shahina Mukadam, independent market expert, and Vaishali Parekh, head of tech research at Prabhudas Lilladher, to answer all of your queries. Ladies, welcome to the show. Vaishali, let's start with you. It's been a down day. We haven't seen it very often for our markets. But nonetheless, how would you approach it?
Very good afternoon, both of you. And yes, after a very long time, we started a very strong opening. But yes, market is getting a bit nervous ahead of the budget day. So technically speaking, we were expecting, we had our projected target of 24,950, and we did pretty much close to that. And from here on an intraday basis, I would say 24,550 acts as a support. So I think we are well within the range for today. As far as Bank Nifty is concerned, not much to say. It's the SBI among the banking stocks which is outperforming and showing a lot of strength. But Bank Nifty on the whole continues to have a range of 52,000 as support and 53,000 as resistance. So that's how the major indices levels are.
Okay, all right. Well, we do have a couple of queries now. We do have Chandrasekhar, who writes to us from New Delhi. And he holds 380 shares of Adani Total Gas, which he's bought at around 1,150. So he's sitting on a loss there. He wants to know what to do, the future prospects of this investment. Well, Shahina, we understand that you don't look at this stock, so I'm going to toss it over to Vaishali to answer the technicals and what she thinks of it.
The stock actually has really underperformed before the issues that the Adani sector had. So the high that was made was 3,900 levels, and now for a very long time it is consolidating. So only a positive thing is that it is maintaining its support on a 200-day moving average. So I would say now that he is holding on since such a long time, continue holding, keep a stop loss of 850 levels from here on, because once we see a momentum picking up and the stock moving about 980, I think it's ready to show some bounce back. So I would say now that he's held on for so long, continue holding with the stop loss.
Okay. Anything within the same space that you would recommend, Shahina?
Oh, well, in the power segment, I believe Tata Power looks interesting in terms of valuation, also in terms of the way they have controlled the debt, as well as their increase in capacity that they are planning in the renewable energy space and solar space. So yeah, that's one space in terms of that's one stock in this space that I would like.
Okay, all right. Well, we do have Balaji now, who writes to us from Tamil Nadu, holds 2,000 shares of Utkarsh Small Finance Bank, which he's bought at around 55 odd rupees. So he's sitting on a loss there. And 500 shares of Bank of Maharashtra, which he's bought at around 65.85. He wants to know what to do, whether he should hold or sell these current investments. So right now, just about, breaking even on one stock and sitting on a minor loss. In terms of the financial space, do you think these two are good stocks to hold on to at these levels, Shahina?
Well, in fact, I would prefer another bank, like maybe a federal bank, over both of them. While Utkarsh has actually, it's a niche player, and it is a niche player in the western region, northwest region. But at the same time, I believe that in terms of valuation and growth, I would prefer Federal Bank at current levels.
Okay, you would prefer Federal Bank at current levels. Technically, Vaishali, what's your recommendation on this one?
Nothing is really happening in Utkarsh Bank. I think our clarity comes only about 53, 54. And at the same time, there is a strong support at 46. So right now, it continues to be in a range of 46 as support and 53 as a resistance. Unless and until we see a decisive move either ways, it's hard to tell. but I would say wait it out, because right now market itself is quite vulnerable. So I would say wait it out. Let's wait for some clarity. As far as Bank of Maharashtra is concerned, I think gradually we've seen good improvement in this stock, and well, the long-term trend is also intact. So I would say continue holding, because 60 acts as a support, and positional trading target comes to around 73 to 75 levels.
Okay, all right. We do have Prem Garg now, who writes to us from Thane. He holds 200 shares of Keynes Technology, wants to know what to do with the prospects of this investment and whether he should book his profits or stay invested. So he's sitting on a good profit when it comes to Keynes Technology. What's your recommendation on this one, Shahina?
Well, he can hold it. I believe there is a bit of, it's slightly expensive on the valuation basis, but in terms of future prospects, I believe that there is a lot happening. So you can hold it, you can keep a stop loss, but you should hold it as of now.
Okay, so we should probably hold on to it. And what's your recommendation on this one, Vaishali?
So there's no damage to the trend right now, but on a near-term basis, I would say keep 4,000. I mean, it's 398063. So I would say keep 3,800 as support. If that level breaks, then I think it could get into further corrective move. So that is how he should continue holding the stock.
Okay, all right. Given returns, handsome returns of around 55% in the past 3 months odd. So that's the word coming in on Keynes Technology. We do have Jinu George, who writes to us from Goa. He holds 3,500 shares of Cochin Shipyard. Just look at the profit that he's making on that one. He's bought it at around 880 odd rupees per share. He wants to know what to do, stay invested or book his profits. Around the budget, important question, because it fits into this entire defense portfolio, which is seeing a lot of traction. So from that context, what would your recommendation be, Shahina? Is sitting on a massive profit. Do you think it's prudent to take some off the table or to just hold on?
Well, it would be prudent to take some off the table, in my view, if you're a medium-term investor. I believe because of the expensive valuations, the stock is likely to see a bit of time correction rather than, any dent on actual performance. Even if we saw the full last year, FY24, while, they had a turnover growth of about 50%, their profits more than doubled. And this is likely to continue for quite some, like maybe couple of years, because, you have order book position, which is 5 times their current year revenue. So definitely as they improve the efficiency, I think, the performance will keep getting better. At the same time, I say maybe you can take a bit of profits as of now if you're a shorter term investor, because valuations have really become pretty expensive. If you look at it from whichever parameter, EV to turnover, profit, EV to EBITDA. So I think to an extent, you're making good money. You can take part profits and look at it, re-enter if you see any correction at any point in time in future.
Okay, all right. Well, what are those handsome returns of 677% in 1 year for Cochin Shipyard? That's the key question. I'm sure you have a lot of retail participants who are asking you this question, Vaishali, as well. What does one do with such kind of investments or such kind of gains that they've seen in retail stocks? Technically, how do you track something like this, which is, just gone through the roof? And what would your advice be to retail investors who are sitting on a huge amount of profit in specific stocks?
Exactly. My view matches with China, because even on a technical front, there is some sign of exhaustion. And right now, as I said, market is quite at a make or break levels. So it's very hard to tell what will correct, what will not, because once one correction or a profit booking sets in, I don't think any stock can be, taken as an exception. So right now at a current juncture, I would definitely say one should book a partial profit, wait for some clarity to see the new round of momentum setting in, or some corrective move at a support level. That would be ideal to re-enter, and that's how one can better the cost as well.
Okay, all right. Well, we do have the Jubilant Pharmova numbers which are flashing on your screen. The stock is up around 5% reacting to it. Margins have expanded to 14.5% on a year-on-year basis, and Q-on-Q as well, 14.5 compares to around 15%, so it's done well there. There is a one-time gain which has really aided the numbers this time of around 396 odd crores. So the reported profit is around 382 odd crores and the gain is around 396 odd crores. So maybe the net profit is around 80 odd crores is what they've reported on an adjusted basis, which would be better on a year-on-year basis because it was 6.4 crores same time last year and versus a 58 crore loss last quarter. So it's been a good improvement in terms of the bottom line on a reported as well as adjusted basis, and the margins have improved as well for Jubilant Pharmova. Shahina, do you look at the stock?
I think there's a good rebound that's happened in terms of performance. As you mentioned, they were making losses. There was some restructuring that has happened. I think at current levels, for the shorter term, you may see some bit of, maybe consolidation after this jump that we've seen, this big jump now that's just happened post numbers. But I think after that also, I think we could see a bit of consolidation. But stock looks good from current levels for the medium term holder.
Okay, all right. Well, on that note, we need to take a quick break, but more queries on the other side. Stay tuned. Welcome back. Well, we have Shahina as well as Vaishali to answer all of your stock queries, and we have a couple of numbers which are on your screen. Jubilant Pharmova, which is holding with a gain of around 5% odd. A couple of these metal stocks are really taking it on the chin this afternoon. Tata Steel, Hindalco, JSW Steel, all of these stocks are down anywhere between 3.5% to over 5% odd or close to 5% odd. So that's really the screen for you this afternoon. And the advanced decline ratio extremely weak on the Nifty as well. We just about have around 5 stocks which are advancing, and the remaining 45 odd stocks are declining on the Nifty. So that's what the screen is looking like, and that's what you can see in terms of the mid cap space as well. But let's get in a couple of more queries. We have Ramesh Jain, who writes to us from New Delhi. He holds 25 shares of Delivery, which he's bought at around 380 odd rupees. He's just about, breaking even on his investment, wants to know what to do with this particular investment. Well, over to you on this one, Vaishali. Just about breaking even, but do you see further upside technically?
Well, there's nothing clear in the stock. It is on a downward trajectory. So right now, all I can say is that the indicators are showing that there could be a bounce back right now. So I would say 370 should be taken as a stop loss and wait for some bounce back coming in. Maybe first target could be 400, and above that, one can look for a target of around 430. So that is how I would look at this stock for now.
Okay, all right. What about you, Shahina?
Yeah, I would concur. One can continue to hold this delivery, the stock. Basically, yields are improving. And we saw that last year was the first full year of profitability on the EBITDA level. In terms of capex also, I believe they are going to now limit their capex, trying to improve the yields on the existing facilities and some capex in the Bangalore facility. So I think overall this new age stock does look like, one can continue to hold for the medium to long term.
Okay, all right. Can hold for the medium to longer term. Aditya writes to us from Karnataka. He holds 50 shares of NMDC, which he's bought at around 253 odd rupees. And he's asking what to do. So he's sitting on a bit of a loss there because his buy price is around 253. Wants to know what to do, whether he should switch to any other stock. Well, Shahina, would you recommend a switch from NMDC to any other stock? And if so, which one? And would it be a portfolio of stocks that you would recommend?
Well, the issue with NMDC is that the stock has actually started, in my view, to start looking like it is consolidating. If you saw 2 years back, iron ore prices were over $230, and now it has come down to about $100, round about that. And iron ore prices, that they are remaining a bit soft because of the subdued demand from Chinese buyers. At the same time, it seems to be consolidating in these levels. So I would believe that it is better to hold, as of now, and keep a stop loss. And, if the bounce happens, then I think you would get a decent return from, the investor is a bit disappointed with his buying price. So maybe he will make some money to keep a stop loss and then hold it for the medium term. And it sort of will move in the way iron ore prices move.
Okay, all right. I'll follow the iron ore prices, but Vaishali, technically,
Well, it's showing signs of weakness. So I think in all likelihood, this can go towards 200 levels. So depending on the time period that this person is wanting to hold, I would say, I mean, actually long term, because all these stocks are very cyclical. I don't think one needs to worry in a stock like NMDC and all. So in my opinion, if it's for a long term perspective, if the stock goes towards 200, one can add more.
okay, all right. Well, on that note, we need to take another break with the news that we have the markets which are under pressure. Now the Nifty showing a cut of almost 1%. So it's been an aggravated loss that we've seen just in the past couple of minutes. Advanced decline ratio has been extremely weak and is holding at that ratio of around 1:3. But I suspect that there could be a further worsening based on just what we're seeing for the frontline indices. So the Nifty down over 220 odd points. We have the sensex, which is at the low point of the day, down around 583 odd points. Take a break and be back. Welcome back. Well, for the markets, it is under pressure. In fact, Vaishali, just wanted your thoughts because we are seeing a incremental amount of weakness which is coming in for the markets, and in fact, the Nifty is now shed over 220 odd points. What would your approach be towards a couple of these mid caps which are now selling off? We spoke about the metal space, but even the likes of TechM, Tata Motors, NTPC, Wipro ahead of its numbers. All of these stocks are showing cuts of anywhere between 2 to 3 odd percent. ONGC, which has been a rank outperformer this year as well, is showing a cut of around 2 odd percent.
So as I said first, on the whole, because Nifty is at a make or break level of 24,550 for an intraday basis, 550, 600. So I think taking that into consideration, we are seeing that yes, there is some profit booking emerging. But if we talk about stock specific, for example, Wipro ahead of results, but I guess the trend is pretty much intact, and some bit of consolidation is what we are witnessing in ONGC and Wipro and things like that. But Tata Motors has shown some signs of weakness. Below 1,000, it's showing it all likelihood this can go towards 980, 970. So one has to be cautious at these levels.
Okay, all right. One has to be cautious at this point in time. We do have another query now. We have Reema Shah, who writes to us from Gandhinagar, holds 20 shares of ICICI Bank, which is bought at 987. Wants to know what to do. She's sitting on a profit right now of around 5,000 odd rupees, and she can hold it for a horizon of around 5 odd years. Well, it's more or less a portfolio stock, you would have to say. So, Shahina, from that point of view, 5 years would be prudent for one to probably hold ICICI Bank?
Yeah, definitely. It's a portfolio stock, as you put it, with price to book even currently about 3 times. It's not expensive. You have the loan book growing by about 15%. You have NIMs above 4.3, likely to be between 4.3, 4.4%. So things are going well. And it's, one of the leading banks in terms of their retail portfolio. So definitely it's a portfolio stock one can hold for the long term.
Okay. And what about you, Vaishali, ICICI Bank?
I would say this bank right now, in spite of all the choppiness, is holding very well. So that shows the inherent strength. So now if it's for a longer time period, I mean, of course, even the monthly chart, etc., is showing a very strong trend. I would say such a stock should be a buy on dip strategy and keep adding to your.
Okay, all right. Well, we do have Rohit now who writes to us. Before that, I just want to address the Atul Q1 numbers. Revenue is up around 12% EBITDA has expanded quite significantly as well, up over 20% year on year. So EBITDA has come in at around 223 odd crores and margins close to 17% for that particular company. Atul in focus. But we do have Rohit who writes to us from Chennai, holds 10 shares of PI Industries at 3380. Wants to know what to do, whether he can stay invested for 1 year or look for better opportunities in this particular space possibly, or maybe even outside. Well, Shahina, I'm going to toss it to you on this one. What would you recommend?
I would recommend that he can switch from PI Industries. While the overall chemical industry has been going through a pain, the pesticide industry also, over the last 1 year, PI Industries has managed, to show growth in revenues to maintain its profitability. At the same time, I believe in terms of valuation, everything is priced into the stock. It's very expensive. If you look at EV to sales, it's 6 times. You look at PE, it's 30 times. For a chemical stock, which is likely to see the whole sector likely to see continuing slowdown for the next couple of quarters, 2-3 quarters, I think one can switch.
Okay, all right. And a quick word on this one, Vaishali. It's just about given returns of around 6% in the past year.
Technically, it is quite intact. The trend is also intact, and 3,500 acts as a very good support. So if chemical sector and PI Industries continues to move higher, I think this can go towards 4,200. That's a level to look at for booking profit. But however, my view gets negated if 3,500 levels.
Okay, all right, fair enough. Well, on that note, that's all the time that we have on the show. But do remember to email us your questions. We'll address them with our experts. Stay tuned. Closing bell up next.